Okay. Good morning, everyone. Good morning, Swaminathan. Good morning, Leela. Good morning, Vibhu. Good morning. Ind AS 19 that deals with employee benefits is our next standard that we will be discussing. Okay, so you had a similar standard in your AS regime that was AS 15 that dealt with accounting for employee benefits. So largely you are having common concepts between the two. There are some differences here which we will discuss as we progress. Okay, so let us now get back to the subject proper. So when we talk about Ind AS 19, it covers employee benefits. Okay, so now what do you mean by employee benefits? Employee benefits means any payments that could be made to the employees. Okay, any payments that could be made to the employees gets covered in your employee benefits. Now, what is the objective of this standard? Objective is to prescribe accounting and disclosure for employee benefits. Why is this important? See, the basic reason why this is important is because employee benefits come in various categories. You have something like salaries, which goes on a monthly basis. You have something like bonus that goes out on an annual basis. You have something like contribution to a provident fund that again goes as a percentage of their salary on a monthly basis. So all these categories of payments, what I just now discussed, that is salaries, bonus, contribution to provident fund, all these are essentially payments that happen on a regular basis. This is also covered by Ind AS 19. But there are certain other category of benefits. For example, post-employment benefits. On retirement, suppose you have served more than 5 years, you become entitled to gratuity, whether retirement or resignation. Okay, you become entitled to gratuity. Then there is something known as a long service reward or long service award. Okay, somebody has worked for 10 years, 15 years in an organization. They typically give some reward to that employee for his long life that he has spent in the company. So that becomes one of the rewards that goes. That also becomes an employment benefit, and therefore that also gets covered here. Okay. Then you have something known as retrenchment compensation. Employees are terminated en masse. Okay. And then they are paid 3 months salary, 6 months salary. Recently, I saw TCS somewhere they are giving to such selected employees close to a 2 year severance package. So all this is nothing but benefits that are being given to the employees. So this also gets covered under your employee benefits. Okay, so basically all these categories get covered under your employee benefits. Now, why do I need a separate standard for this? See, the key point is employee serves the organization. Okay, that is, employee provides services to the employer. In return, the employer provides the benefits. It could be salary, leave encashment, pension, gratuity, etc., whatever it is. Okay. Now the thing is, when an employee gives services to the employer, benefits will start accruing to the employer. Benefits in the form of whatever. If he is in the sales team, then sales will accrue, profits will accrue. Okay, those kind of benefits go on getting accrued to the employer. So in line with what benefits accrue to the employer, cost also must be recognized in the same line. So basically what we are doing is we are aiming to apply the matching principles. Okay, so when the benefits are getting accumulated on one side, on the other side you are having costs also getting accumulated. You need to accumulate them parallelly. So that is the whole crux of this standard. You tell me uh, on this note, gratuity, is it something that accrues after resignation, or is it something that builds up during the course of employment?
During the course of employment, sir.
It is something that builds up during the course of employment. So obviously, when should I book the cost for this gratuity? At the end of the resignation, or should I proportionately do some kind of build up when the service is being given?
Proportionately, we need
At
to
the
accrue.
time of service giving proportionate basis.
Correct. So all of us understand that this is a benefit that does not suddenly crystallize at the end of his employment tenure. Okay. It is not like suddenly he comes on that day and notices, oh, I'm getting gratuity. No, he's aware that the gratuity will be payable. The company is aware gratuity will be payable. And therefore, the build-up must happen over the lifespan of the employee's term in the organization. So that is what this standard seeks to address. Okay. So basically, it is going in for a matching principle between the services that employee gives vis-a-vis the payment that he receives. Okay. So this, what would happen without Ind AS 19? Generally, there would be a tendency to account for gratuity, pension, all these. Generally, the tendency would be, why should I estimate? When payment happens, that time I will book an expense. So generally, the tendency is to account for it on a payment basis rather than accruing it. So when that is the tendency, accounting for it on a payment basis will violate the matching principle or accrual basis. Okay, so that gets violated. And that is why this standard ensures that we comply with the framework. Okay. All right. These two questions you can just go through for homework. It's very simple. I have uploaded two files day before yesterday. One is this presentation. I hope you are having access to this. It is in the notes section. And another one is this assignment section. Assignment section basically contains the questions which are additional, which are not mentioned in your study module. Okay, so like these questions. Okay, these are not mentioned in study module. So this question as well as its answer is there here. This is a very simple question, so I'm just moving forward. Okay. All right. Now, what gets covered under Ind AS 19? The scope of Ind AS 19. One, it is applicable for the accounting of all employee benefits. Okay, all employee benefits. And all employee benefits get categorized into four umbrella or four pillars. First one is short-term employee benefits. This is basically your payments which happen within 12 months. Okay, for current employees other than termination benefits. So you get your salaries, your wages, your annual bonus that you pay within a year, every year. Okay. Then you are having your contribution to Provident Fund. All these get covered here. Okay. Then you have something known as post-employment benefits. Post-employment benefits means employee on ending of the employment through retirement or resignation. Through retirement or resignation, at that point of time, what is going to be paid to the employee? That covers, and that is getting covered under post-employment benefits. Other long-term employee benefits, this is residual category. This is not payable on retirement or resignation. This is payable like a long-term service award. Somebody worked for 10 years, give him something. This becomes a long-term employee benefit. Okay. And finally, you have termination benefits. This is paid when an employee is retrenched, when an employee is asked to go, when an employee is laid off, that time you pay termination benefit. The difference between post-employment and termination is who is initiating the action. In a post-employment benefit, typically it is because of either superannuation, which is again a contract that 60 years onwards you will superannuate from the company, or voluntary resignation by the employee. Whereas termination benefits, the company, the employer is terminating the services of the employee. So there is a contribution that there is a payment that needs to be made as a compensation. So that is given to them. So all these four categories are covered here. What is excluded? Everyone knows the standard we have already covered, Ind AS 102. ESOPs will not be covered here because that is specifically covered in Ind AS 102. And accounting and reporting by employee benefit plans, that also does not get covered here. Okay, are we okay with this? Scope is fine? Yes? No
Yes, sir.
doubts? Any doubts? No doubts? Ayush, Bibhu, Sanjay, Leela, all
Yes,
clear?
sir. Clear.
Okay,
Yes,
fine.
sir.
Now we will move to account for all these categories, how they are accounted one by one. That is the whole crux of this standard. And then you have certain disclosures in each of these categories. Okay. So what is a short-term employee benefit? Okay. These are benefits due to be settled within 12 months after end of the period in which employees render the related service. So they rendered a service, they become entitled to certain compensation. They become entitled to certain remuneration. So that remuneration is to be paid within 12 months, after the end of the period in which employees render the related service. So that is why it is called as a short term. Short term kab hoga? When settlement is within 12 months. That is why we call it as short term. And what all do we have? We have salaries, wages, social security contribution. Social security contribution is something like your PF. Then you have paid annual leave, paid sick leave that you get. You have profit sharing and bonuses, as well as certain non-monetary benefits. All these get covered under short-term employee benefits. These are illustrative. Okay. Examples. Okay. Next. Accounting for this, straightforward. The moment employee works, you look at his compensation or remuneration amount, and that much you accrue as an expense and credit as a liability. So this is a very simple, straightforward accounting. Okay. And do you do a discounting? Answer is no. Why? Because it is to be paid within a period of 12 months. So measured on an undiscounted basis at nominal value of cash flow. Actuarial assumptions not required. Actuarial assumptions not required because there is no complexity that is involved. No possibility of actuarial gains or loss. Very simple. No specific disclosure under Ind AS 19. No specific disclosure. Only thing is, if there is anything regarding related parties, you will have to disclose. And finally, change in timing of settlement. Sometimes a payable within 12 months gets payable after 12 months. So should I change the nomenclature? Answer is, if the change is temporary, reclassification is not needed. But if entities' expectations of timing of settlement change is not temporary, then consider whether definition of short-term benefits is still met. Consider whether benefits of short-term benefits is, whether definition of short-term benefits is still met. Are we okay with this? Yes. Is it fine?
Yes, sir.
So typically journal entry that will be passed is expenses, that is employee benefit expenses account debit, or if you are capitalizing it, then you debit the respective asset account. Okay, debit to liability cash. To liability, that means if you paid later, but now you are booking the expense, or if you are paying it right now to cash. Is it okay? Have you understood this? Yes. Anybody has any doubts here?
So can you
Yes, sir.
explain this change in timing of settlement, the last one?
See, sometimes what happens, suppose you have uh, your annual bonus, okay? Annual bonus. Normally, they settle in certain companies around Diwali time. Yes, Diwali, Dasara, this is the time when your annual bonus gets settled. So your financial year ends on 31st March and the bonus is payable in and around Diwali time. So is it payable within 12 months from end of the financial year? Yes.
Yes.
So
Yes.
therefore, ideally what it would be, it would become a short-term employee benefit. It would become a short-term employee benefit. Now I'll move one step further. In between, COVID came. Yes, COVID came, companies' operations were shut for 4 months. Okay, let us suppose lockdown, people got affected by COVID, operations did not resume, you had lot of restrictions, you had a 45 day lockdown, then when you came back people were falling ill. So that was the kind of cycle that you went through. So what the management says, the bonus, let us say for 2021, which was payable in October 2021, will now be paid in October 2022. That means let us start our factory, let us recoup our operations, let us get our cash inflows in place. So in October 2022, we will pay the bonus for 2021 as well as for 21-22. Did you understand this? Did you
Yes.
understand the modification? Yes.
Yes. Yes.
So now tell me, am I settling the bonus of 2021 within 1 year of March 21 or beyond 1 year of March 21?
Yeah. Beyond 1 year.
Beyond 1 year. But it is only a temporary adjustment. It is only a temporary adjustment. Yes. Why? Because of that COVID event. Thereafter, you can see 21-22 is again being settled in October 22 itself within a period of 12 months. So this is a rare case where the settlement was pushed to beyond 12 months. Are you able to follow?
Yes. Yes.
So
Absolutely. Yes.
this is a case where the timing of settlement has changed only temporarily. So therefore, I need not classify this bonus of 2021 as a long-term benefit. I can treat it as a short-term benefit. Are we okay? Yes.
Yes.
On the other hand, if you believe that this is not temporary, the characteristics of the benefits change. The characteristics of the benefits change. So let us suppose there was a benefit that was being paid uh, something like best performer for the year. Best performance for the year. This was being paid. So let us suppose this was being paid on 31st August every year. So is this a short-term benefit? Answer is yes. It is payable within 12 months from 31st March. Now what they are saying is, see, best performer for the year, we do not find it so stimulating for the company also, for the employees also. What we will do is we will evaluate the employee's performance over a 3-year period. And after the first after the amounts are determined, we will then look at the performance, determine the amounts over a 3-year tenure. Instead of an annual cycle, we will be having best performer for a 3-year cycle. Are you able to follow? So in this case, the benefit itself is getting recasted from an annual benefit to a benefit that is going to be paid once every 3 years. Are you able to follow? And therefore, the expectation of the benefit, is it temporary or payment? The change in benefit terms, is it now temporary or permanent?
Now it is a permanent, sir. It's a beyond
Yes.
1 year.
Sanjay, did you follow? It's
Yes.
beyond.
Yes. Yes.
Yes.
Yes. Now
So
it is permanent.
in that case, the company has to evaluate whether definition of short-term benefit is still met. Clearly, if you are settling this every 3 years, at the end of every 3 years, You look at the performance over a 3-year tenure and then settle. And after that settlement, further 3 years, then probably treating it as a short-term benefit does not make sense. You will have to treat it as a long-term benefit. Are we okay with this? Yes?
Yes.
Yes, sir. However, in that case, once in a 3 years paid, however, on the yearly basis, you will accrue that expenses.
That will always be there. That will always be there. Yes, no doubt about that. Okay, all right. Now we come to short-term employee benefits. See, all of us are very, very comfortable with accounting for salaries. So salaries we will not discuss separately. All of us are very comfortable with accounting for uh, provident fund, etc., etc. That also we'll touch upon briefly. But what is not very familiar is short-term compensated absences. Have you heard this term, short-term compensated absences? This is a benefit that is given when an employee takes leave in an organization. So all of us are aware we are having leave categories like sick leave, casual leave, earned leave, or privilege leave. Are you aware of this? Yes, sick leave, casual leave, earned leave, or privilege leave. What is sick leave? An employee falls sick, he can call it a day and say that, look, I'm not there today, I'm not feeling well. Please mark me absent. So that becomes a sick leave. Casual leave, I don't want to come to office today, just my mind, just a casual leave. You can take it. And then there is something known as earned leave or privilege leave. This is a benefit, a leave that is given to you for the services that you are continuously rendering. For the services that you are continuously rendering. Typically, for every 11 days worked, 1 day of privilege leave could get accrued. It depends on organization to organization, but this is the typical trend that is followed. Okay. So normally companies give something like, if they give a 15-day privilege leave, that means for every 1 month worked, you will have roughly 1 day of leave getting credited. You will have 1 day of leave getting credited. Say 25 to 26 days you work, 1 day of leave gets credited. Are you able to follow? You are able to understand these things? Yes? You are familiar with these types of leaves?
Yes.
Now you
Yes.
tell me one thing. I'll come to this. You first tell me, is the fact that an organization gives leave to its employees, is giving leave a benefit or not?
Sir, it's a benefit for that employee, sir.
Yes. Anybody else who disagrees? Everybody agrees. So basically, when you give a leave, you are giving it, you are giving a benefit, which is why we call it as compensated absences. We call it as compensated absences. An employee does not come. In spite of that, you are not deducting his salary. So basically, you are compensating the absence. Now, these compensated absences are categorized into two parts. First one is accumulating paid absence. Second one is non-accumulating paid absence. Let us look at the simpler one first. Non-accumulating paid absences. Here what you will have categories like sick leave or casual leave. You will have categories like sick leave or casual leave. Again, this is not fixed. Employer to employer, company to company, the policies change. But generally what I have seen is casual leave goes for non-accumulating. Sick leave generally goes for non-accumulating. So what happens here? Understand the situation. Casual leave. Suppose you have a policy where every year employee gets 8 days of casual leave. 8 days of casual leave. If he has availed 8 days, no problem. Nothing will be done. If he avails only 3 days and 5 days are unavailed, he cannot carry it forward. It is non-accumulating. It is non-accumulating. So can you carry it forward? Answer is no. So now, if an employee who has 8 casual leave standing to the credit of his leave balance, out of that, if he avails 3, he does not avail the remaining 5 by the end of the year, then those 5 days of leave lapses. Those 5 days of leave lapses. Are you able to follow this? Yes?
Yes. Yes.
All right. Now, please pay attention. Now, if an employee works all the days without taking even one single day of casual leave, are you paying him something extra?
No.
Yes. Yes. So I got one answer. Are you paying him something extra? Answer is no, Sanjay said. Bibu, what do you think?
No, sir.
No, you will not pay. Everybody agrees to that? Sagar, Geeta, Neha, Ayush. All right. Neha agreed. Leela, you said no. I think nothing will be paid is what you are trying to tell. Okay. Yes. Anybody else who differs? Suppose an employee does not take even one day leave in his office. You have some very proud people who say, I have not taken any leave for the last 3 years, for the last 5 years, for the last 7 years. So, for these employees who do not take even one day of casual leave, is there anything extra payable to them? Answer is no. But suppose they take one day leave. They take one day leave. They have 8 days of leave, let us suppose, casual leave. Out of that 8, they take one day of leave. Do you have to pay them for that day or not?
Yes.
Yes. Geeta, I think you were trying to say something. I cut your this thing. What about Neha? If out of 8 days they do not come for one day, will you pay them something? So
Yes, sir. Because the employee is entitled to receive that money. The company is liable to pay.
yes. So basically, pay them something means you will not, I'm not saying pay them something extra. You will pay them the overall salary that was supposed to be paid. So let us suppose in a year, 300 days are working days. Okay, you remove the Sundays. 50 Sundays you remove, 52 Sundays, and 12 days of festival holidays you remove. Okay, 10 or 12 days. So you remove 65 days all in all. So what is left is 300 days. This is a 6-day working company. So 300 working days are left. For an employee who does not avail any leave, he would have come to the office for 300. For an employee who has come to the office for 295 days, he took 5 days of casual leave out of 8 days. Will the salary, suppose they are on same pay scale, same pay grade, same job, same work. So let us suppose their salary is 12 lakhs per annum. Okay. For an employee who comes for all the days, how much are you going to pay? 12 lakh rupees. Yes. For an employee who has come for 295 days, how much are you going to pay?
12
12
lakhs.
lakhs.
Again, you will pay 12 lakh rupees. You will not deduct 5 days salary. Why? Because this is a leave benefit that you are giving him. So basically, now understand. Now I'm coming to the explanation of this. Okay. An employee comes for 300 days, works for 300 days, gives benefits to the employee for 300 days, and takes the payment for 300 days. This is a straightforward arrangement. The second case you see, an employee comes to the office for 295 days, does the work equivalent for 295 days, But in turn, he will get compensated for how many days? He will get
295.
compensated for full 300 days.
Full 300 days. Yes.
Yes, Geeta, Leela, Swaminathan, Ayush, are you able to follow?
Yes.
Yes, sir.
Yes, sir.
Yes.
Very good.
He is getting compensated for full 300 days. So now, out of 300, 295 I had to pay because he has worked. But these 5 days, I am obligated to pay because he has been absent. I am obligated to pay because though he did not come, by virtue of the leave policy, I am entitled to pay him. So an obligation arises when employee takes leave. When employee takes leave. He did not come. The fact that he did not come still makes me liable to pay him. So in the case of non-accumulating paid absences, you will be making the payment when an employee does not come to the office. So recognition typically is based on absences incurred. Are we able to understand this? Yes?
Yes.
Sure. Any doubts? Geeta confirm. Swaminathan, Ayush. Ayush, are you able to understand?
Yes, sir.
Okay.
Yes, sir.
Swaminathan, all
Yes,
clear.
sir.
Sanjay, Neha,
Yes, clear.
okay. Sagar, Vibhu, all clear. Okay. We now move to the next part. Okay. Next part is accumulating paid abs. ये non-accumulating है. मतलब for an employee who has not taken even 1 day of leave, this employee of 300 days, he has not taken even 1 day of leave. So at the end of the financial year, 8 days of leave are left in his account. The meter sets to 0. The next financial year, when he starts his leave count, it will be with 0. It will be with 0. Are you able to understand? इसको हम लोग बोलते हैं non-accumulating absences. ठीक है? Now we come to accumulating absences. Paid absences. What do you mean by accumulate? Very simple. Iska opposite of non-accumulating. Non-accumulating leaves lapse. Here they can be carried forward for use in the future. They can be carried forward in future periods if you are not using it in totality in the current period. Okay. So an employee comes to the office. So let us take a case of a privilege leave of 12 days. How does this work? An employee is employed for 1 month. After 1 month, 1 day leave gets credited. He works for 2 months. At the end of second month, another 1 day leave gets credited. So total you have 12 days. So now tell me one thing. He is at the end of the year. Suppose he is an employee who has come to the office for 300 days. He has not availed even one single privilege leave. Okay. So now you tell me this privilege leave as per the company's policy can be carried forward. So at the end of 300 days, his leave balance will be 12 days. Next year, this is year 1. Next year, he will start with opening balance of 0 days or 12 days. Bolo?
12 days. 12 days.
He will start with opening balance of 12 days. Plus, next year, further 12 days leave will accrue. Correct? Plus next year, a further 12 days of leave will accrue. So next year, he can technically, as per the employment contract, he can avail how many days of leave? 12 plus 12, he can avail all in all 24 days of leave in the next year. Are you all with me till now?
Yes.
Yes?
Yes,
Yes.
sir.
All right. Now you tell me, at the end of year 1, he has not availed a single privilege leave. So, am I obligated to compensate him for these 12 days? Am I obligated to compensate him for these 12 days?
Yes, sir.
Yes. Everybody understands? I am obligated to compensate him for these 12 days. Yes. Why are you getting obligated to compensate for these 12 days? Because he did not take even 1 day leave in the entire year. Are you able to follow? Yes. उसने एक दिन का छुट्टी भी नहीं लिया. इसकी वजह से his entire leave balance is outstanding. Yes. In the future, he can take and utilize these 12 days. Are you all with me?
Yes, sir.
Yes. So basically, here, when does the obligation arise? Does the obligation arise because an employee has taken leave, or does the obligation arise because an employee has not taken leave and instead provided service in those periods?
Sir, when the employee not taken the leave and it's obligation for the company.
Yes. Are you able to follow? Leela, tell me. Ayush,
Yes.
Yes, sir.
Leela, all clear, beta? All clear. Okay. Geeta, Neha, Sagar.
Yes, sir.
Yes. So, in accumulating absences, accumulating paid absences, because an employee comes to office, does not avail the leave, I, as an employer, will be obligated to pay him for the days that he has come and worked without availing the leave. So, clear cut distinction from non accumulating paid absences. Okay. Now, that is the meaning of this. Obligation arises as employees render service. In our example, obligation arose because employee rendered a service for 300 days. And in those 300 days that he has worked, it has increased their entitlement to future paid absences. In the next year, instead of 12 days, he can get 24 days. So by serving 12 days more in the current year, he is effectively going to get 24 days in the next financial year. So today's services that he has rendered is giving rise to an increased entitlement of 24 days of leave in the next year. That is the meaning of accumulating paid absences. Now, obligation है, then I have to settle it. Since the company has the obligation, the company has to settle it. There are two ways this can be settled. First one is employees are entitled to a cash payment for unused entitlement on leaving the entity. Whatever leave encashment unused balance is there, that will be settled in cash. So employer will say, ये तुम्हारा leave balance है, this much is your leave balance, this is your salary, prorate it, take this cash and leave. So therefore, that is known as cash payment. And we call such types of leaves where you can carry forward, but obligation will be met only by payment of cash. You will say, 24 days leave I will not give you. You can take your 12 days of leave, but the 12 days which is carried forward, I will be settling it in cash. I will be settling it in cash. So those type of absences, we call it as vesting accumulating paid absences. Vesting accumulating paid absences. Are you all with me? Yes. Are you all with me?
Yes, sir.
Now, suppose company says it doesn't matter whether you take or not take. I will not give you cash, but next year I am going to give you the leave not only for next year, but also the shortfall of current year which you have not availed. So therefore, employees are not entitled to a cash payment, okay, for unused entitlement on leaving the entity. They won't get cash, but they will get additional leaves in the future. Are you able to follow? Yes. Yes.
Yes. Yes.
Sanjay, Swaminathan, Leela, Bibu.
In, in lieu of cash payment, they are giving that leave.
Yes, they are giving that leave. So they will say, okay, so current year you have not taken 12 days. I'll not pay you cash, but next year you can utilize these 12 days of leave, which you have not availed in the first year. So next year, if he takes 12 days of leave of the previous period plus 12 days fresh entitlement, he can take 24 days leave and still be entitled to full salary. Are you able to follow?
Yes, sir.
Yes, sir.
Yes. All right. So this is your accumulating paid absences, non-accumulating paid absences. Okay. So now with this background, we will look at certain questions to see how the things are working. Okay. So Mr. Rajan, this is taken from your study material. Mr. Rajan is working for Infotech Limited. Consider the following particulars. Annual salary of Mr. Rajan is 30 lakhs. See, these are very simple questions. These questions what I'm going to discuss for the next few minutes or so, around 3 to 4 questions. These are not exam questions. These are questions to cement your understanding on the concept. Okay. So annual salary of Mr. Rajan is 30 lakhs. Total working days is 300 days. Leaves allowed in current financial year is 10 days. Leaves utilized by Mr. Rajan is 8 days. Okay, so 10 days leave was given. He has utilized only 8 days. The unutilized leaves are settled by way of payment and accordingly carry forward of such leaves is not allowed. So tell me one thing. Is this accumulating paid absence or non-accumulating paid absence?
It's non-accumulating and it's get wasted by way of paying.
It is non-accumulating or accumulating again, and it is getting wasted or vested.
Wasted, not wasted.
Okay, fine. So what is happening is, look, the unutilized leaves are settled by way of payment. Matlab, you are going to give cash. You are going to give cash. So this becomes a vested benefit. This becomes a vested benefit. For that leave, you are going to get cash. And accordingly, carry forward of such leaves to the subsequent period is not allowed. See, this is where things differ. Okay. See, probably when we said non-accumulating benefit, the thing in mind was I cannot carry forward such leave in the future. So let us revisit our example or this example only. 300 days, year 1, he will get 10 days. Year 2's leave entitlement is 10 days which he can take. But additionally, can he get year 1 10 days carry forward? Can he get this?
No, sir. Answer is
No.
no.
No. But what he will get? Year 1
Instead
10
of that,
days cash payout. Yes.
yes, yes.
So when will the cash payout happen? Will it happen in year 1 or will it happen in year 2?
Year 2.
Obviously, it will happen in year 2 because The fact that he has utilized or not utilized the 10 days, when are you going to come to know? You will come to know only at the end of year 1. At the end of year 1, you will not say on the 365th day of his employment, you cannot wake up and say, beta, you have not taken any day leave. So therefore 10 days I will give bonus to you. Can you say that? No. Settlement will happen in his second year of service. It may happen in the 13th month. But what is important is it is happening after he has delivered services for 1 year. Are you able to follow?
Yes.
Yes. So can I say that it is not strictly speaking non-accumulating? Non-accumulating is very clear. इस साल का इसी साल में मिलेगा आपको. In this year you will be compensated everything in relation to that leave. Next year you will not get anything relating to the previous year's leave. But in this case, next year you are getting a cash payment in lieu of the leaves which you had not utilized in year 1. Yes or no?
Yes, sir.
Yes.
Yes,
So
sir.
therefore, this
Sir,
becomes, yes.
however, for the 2 days remaining, the accrual to be done in the year 1.
I'll come to that. I'll come to that. Okay. First, I'm just trying to explain what is the concept. The 2 days and all, I'll come to the proper question after this explanation. Okay. So what does it become? You are giving cash. So it becomes vested. Next year, you are not carrying forward the leave because you are getting cash, but you are going to get cash in the next year. So we call it as vested accumulating benefit. Vested accumulating benefits. Is it okay? Yes.
Yes.
Yes,
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 sir.
sir.
It means when
Because
it's an accumulating paid expenses and we are getting in cash,
Yes.
not it's then it is wasting.
Yes.
And if not, and it's get accumulated, then it's non-wasting.
Absolutely. Bilkul ठीक. Yes. Okay. All right. Swaminathan, anything?
yes, sir. Hence, he is vested to get the cash. Okay,
Yes.
he vesting accumulated paid up.
Yes. Because he'll get the cash payment. He will not be able to utilize this leave in the future, but he's going to get cash for that. Okay.
Yes.
All right. Now let us look at this question. So policy, everybody understood. Very good. So now let us look at this question. He came for 300. His total working days is 300. So 30 lakhs divided by 300 days. That means per day salary is 10,000. Correct? He comes
Yes,
one
sir.
day, he should be getting 10,000 rupees. Very simple. Now, in this year, he has utilized 8 days of leave. So 2 days of leave is
Unutilized.
unutilized. Yes. So now tell me the payout will be 30 lakhs because he has done his entire service. Yes. He has not taken extra leaves. Yes. 10 days leave tha. He has taken only 8 days. So 30 lakhs he will surely get. Plus, by virtue of those 2 leaves which he did not take. See, out of 10, he has utilized 8. So 2 days unutilized leave. Also, he will be compensated at 10,000 per day in line with his salary and total number of days available for work. So therefore, totally the salary cost will be 30 lakh 20,000. Are you able to understand?
Yes, sir.
Yes. Are you able to follow?
Yes,
Yes,
sir.
understood. Yes.
Yes. Sanjay, Leela, Neha, Geeta,
Yes, sir.
all
Yes,
clear.
sir.
Okay, fine. So 30 lakh 20,000 will be the total employee benefits for 20X0X1. That is for the first year. All right. Now, let us move on to the next one. Same data, But see, leave allowed 10 days, leave taken 7 days, leave unutilized carried forward to next year. Now, there is a change. Here you are not paying cash. Here you are allowing carry forward. So what does it become? Vested or non-vested?
It's become non-vesting.
Non-vested. Yes, yes. So this becomes a non-vested accumulating benefits. अभी ध्यान से. See, previous question, it was very simple. You knew 2 days उसने utilize नहीं किया. I have to pay 10,000 into 2. I have to pay 20,000 rupees in cash. You make a provision and finish it off. Okay. Now, look at this. Year 1, year 2. Look at the data. Total working days. How many days? 300. Correct? Out of 300, he can avail 7 days of, he can avail 10 days of leave each year. Correct? If he does not avail, he can carry forward that to the next year. Is the case clear? Yes?
Yes, sir.
Actual leaves. How many days has he taken? Sir, first
7.
year he has taken 7 days of leave. Second year, how many days of leave has he taken? Sir, second year he has taken 13 days of leave. That means effectively he has come to the office for 293 days in year 1 and he has come to the office for 287 days in year 2. Yes, 287 in year 2. Is it okay?
Sir.
Any doubts here? No doubts. All clear? Leela, all clear? Sagar, Ayush.
Yes, sir.
Okay, fine. Now let us move further. Infotech contends that it will record 30 lakh as employee benefit expense in each of the years X0, X1 and X1, X2. That means in year 1 and year 2, it will book 30 lakhs each, stating that the leaves in any case will be utilized by year 2. That means by X1, X2. Comment on the accounting treatment proposed to be followed by Infotech. So what they want to do is expense. They want to book 30 lakhs here and they want to book 30 lakhs here also. Are you able to follow the question?
Yes, sir.
Abhi, you tell me, is it correct to account for 30 lakhs in year 1 or 30 lakhs in year 2?
Sir, I think for the 3 days which have been unutilized, it should also be taken in the year 1, as it's
Yes,
confirmed that he will take in year 2.
yes, absolutely. Absolutely. See, the whole point stems from the fact that in year 1, he has come for 293 days. Against that, in year 2, he has come only for 287 days. Matlab, year 1 mein, he has worked for 6 days more than in year 2. Correct? He has worked for 6 days extra in year 1 than in year 2. If he has come for extra days in year 1, salary cost also should be higher in year 1. Yes or no? Bolo.
Yes, sir.
The expense that hits to the P&L in year 1 must be more than what will hit the P&L in year 2. I am not talking about cash outflow. Cash outflow की तो हमें बात ही नहीं करनी है. Yes, but what will be paid depends on how much he has provided benefit. So again, matching concept. 293 days he came. So therefore, more cost I should book in year 1 and a lower cost I should book in year 2. So now, what is the per day salary? 10,000 rupees. He has come for additional 3 days. Yes. So therefore, your leave accrual in year 1 is equal to 10,000 per day. This is your salary multiplied by 3 days. So this equals to rupees 30,000. Are you able to follow?
Yes, sir.
Acha, will this 30,000 be paid in cash? Will this 30,000 be paid in cash?
Not paid in cash.
It will not be paid in cash. It will not be paid in cash. Okay? That is sure. So now, what will be the entry that will flow? Year 1, what will be your salary expense? Employee benefit expense. कितना होगा? 30 lakhs or 30 lakhs plus 30,000?
It should be 30 lakhs but 30,000 additional.
Yes. Everybody understood this? Yes. Anybody has any doubts, please make me stop. Interrupt, I will not mind. Okay. Girls. Swaminathan, Ayush, Sagar, Sanjay, Geeta, Neha, Leela, all clear?
Yes, sir.
Okay.
Clear, yes.
Now,
Yes, sir.
what will be paid in year 1? Will I pay 30 lakh 30 or will I pay 30 lakhs?
30
Only 30 lakhs.
You will pay only 30 lakhs because you do not give cash for unutilized leaves. You allow a carry forward. So to bank,
And actual is less than 30,000.
in bank, you will pay 30 lakhs. And what happened? There is a shortfall of 30,000. Correct? What is this 30,000? Provision for leave encashment. Are we able to follow?
Yes.
Yes. Next year,
But sir, we are not paying, so why leave encashment?
2 मिनट दूसरे साल में आपका
Sorry, sir.
क्वेश्चन आंसर पता चल जाएगा. 2 मिनट टाइम दे दो. सॉरी मत बोलो. Just 2 minutes. Okay. Year 2. How many days of leave can he avail? 10 days
Only
of
10 days.
and carry forward also, no?
Yeah, that also he is entitled to
He is
take away.
entitled to avail.
That's
Has
3
he
days.
availed that leave?
Yes, sir. He availed that 3-day leave.
He has availed that leave of 3 days. So tell me one thing. In year 2, he did not come for 13 days. Correct? He did not come for 13 days. Yes or no?
Yes, sir.
Yes.
That means for year 2, the entitlement was 10 days. He has not come for an additional period of 3 days. Yes?
Yes, sir.
See, when I say entitlement was 10 days, I am not meaning his cumulative entitlement. Only for year 2, the entitlement was 10 days. He did not come for further period of 3 days. That means, as an organization where the number of working days are 300, he did not come for 3 days out of that. That means how many days of work have I been able to extract from him? I have been able to extract from him work equivalent to 300 minus 3. That is only 297 days. Yes or no?
Yes, sir. He is entitled to receive 30 lakhs.
Yes. Yes. Is it okay? Yes. Any doubts? So tell me one thing, employee benefit expense for the second year, how much should it be? Should it be 30 lakhs? Should it be more than 30 lakhs? Should it be less than 30 lakhs? What do you think?
So it's less than 30 lakhs, 29 lakhs 70,000.
70,000, and it's 30,000 from the provision of leave encashment.
Yes. Others are all following, I hope. Sagar, Sanjay,
Yes,
please
sir.
stop me. Yes.
Yes, sir.
All right.
Yes, follow.
Geeta, are you able to follow?
Yes, sir.
Yes. All right. Fine. Because there are some students who uh, should not get ignored. Okay. All right. Understood. Leela also understood. So employee benefit expense, see, he should have come for 300 days, but out of 300, 3 days additionally he did not come, into 10,000. So 29 lakh 70,000. But payment kitna jayega? What will be the payout that you will give to him?
30
You
lakhs.
will get full
You
30
will,
lakhs.
you will give him full 30 lakhs because you remember ultimately 10 plus 3. He is within the total entitled leave for him. As per HR policy, he is entitled to take 10 days current year plus a brought forward balance of 3 days. So 10 plus 3, 13 days of leave he is entitled to take. And he has taken 13 days. 13 days leave when he takes, he will still be paid the full value of 30 lakhs. So this difference of 30,000 kahan se aayega? This difference is the provision for
Leave encashment.
leave encashment, which I made at the end of the first year. Are you able to follow? Yes.
Yes, sir.
Ayush, clear?
Yes, sir. I'm just talking about the nomenclature. Like we are calling it provision for leave encashment.
Yes.
So actually, there is no cash payout. So why we are calling it leave encashment?
There is a cash payout, but it is not in
At the year one,
specific
it's an year.
identified cash payout for this leave, but by availing more leave in the next year, he is able to maintain the same salary structure. Year 1 also 30 lakhs was paid, year 2 also 30 lakhs was paid. In spite of him availing additional 3 days leave in year 2. That is why we call it as a provision for leave encashment. Is it okay?
Okay, sir. Yes, sir.
It's not necessary that, see, a leave encashment will be to view it just as इस लीव के लिए मुझे कैश मिलेगा. That is a one-to-one sync that you are trying to apply the way we did in illustration 1 is a very specific kind of correlation that you are looking at. But in this case, I'm not looking at that correlation. This is one employee. Suppose there are thousands of employees in a company. One-to-one correlation only HR can do. Your books, you sit doing one-to-one correlation, you will only do this every year. Okay. So one-to-one correlation nahi chahiye. In this case, what happens? I'm not getting directly money for that, those leaves. But what I'm getting is the cash benefit equivalent to the additional leaves that he has taken. He is getting that. Otherwise, he should have been paid 29 lakh 70. He is getting 30 lakhs. That means that 30,000 extra is an encashment of leave. Though it is not having a direct nexus the way it had in the case of vested accumulating benefits. Are you able to follow?
Yes, sir.
Okay, ठीक है.
Okay.
So that
Sir, actually, it's good that he has that non-vesting option. See, if there is no non-vesting option in this case, that the non-accumulated paid options, in that case, it's a loss of pay to him.
of course, absolutely, yeah. So this is so what happens is when you do your audits or when you are on the opposite side from the industry side, you need to understand what exactly is the leave policy? Okay. See, typically I told you we have sick leaves, we have earned leaves, we have casual leaves. So most of the organization earned leave is carried forward. Generally, sick leave and casual leave expire. They lapse at the end of the year. They are non-vesting. Sorry, they are non-accumulating. Okay. But in some cases, I have seen where in organizations, even sick leave gets carried forward. If you have not utilized the sick leave, you can carry it forward. Okay. So in that case, the sick leave is not a non-accumulating benefit. It becomes an accumulating benefit. It becomes a non-vested accumulating benefit because sick leave can only be utilized. You cannot demand cash payment for that. Okay. I have seen policies where this works. It is totally dependent on each organization to frame a policy that best suits them. What happens? Many cases after this COVID, there has been a sudden spike in sick leaves. So therefore, they say that chalo, if people who have not utilized their sick leave, we give them a carry forward for that also. So it does not affect the employee from a employment perspective. So it depends. Okay. Now we move on to the next question. Okay. Assume same information as in illustration 2. Based on past experience, Infotech assumes that Mr. Niranjan will avail unutilized leaves of 2 days subsequently. However, in X1, X2, Niranjan availed in actual all the 3 days of brought forward leave. Compute the expense to be recognized in X0, X1 and X1, X2 and pass journal entries for both the years. Okay. Now see. What has happened? Story goes something like this.
Sir, he in the case he have 3 day leave left as in question 2, but in
Yes,
question it says that he will avail only 2. It's like
correct.
management response. Then
Yes,
will we take only 2 days for
I will come. That is what we have to, that is the concept we are now going to build up. Okay, we are now going to
okay, sir.
discuss that. Okay, yeah. So 300 minus 7 is 293. Working days, number of leaves, net work days. Okay. See, I will just go back to Ind AS 102. We used to do estimation of options that will vest. You recollect? Yes.
Yes, sir.
Did we do? Did we recognize expense based on actual employees who were there in that year? Or did we recognize an expense based on number of employees expected to remain at the end of the vesting period?
Expected of remain.
Expected, yes.
Expected options that are vesting at the end of the year. So there is an element of estimation. Here also, Ind AS tells us, look, you will have to be realistic. You will have to be realistic. Okay. So now the employee in year 1 took 7 days, came to the office for 293 days. Under the policy terms, it is totally normal, acceptable that the employee can utilize 3 days of leave in the future. Totally normal, no problem. Okay. But based on past practice, the employee, it has noticed that the employee has never availed all his leaves. all his privilege leaves. उसने कभी अवेल नहीं किया. So 1 day privilege leave at least has been an accumulated balance in the future. Are you able to follow? In all the years, he has never exhausted his privilege leave. Suppose this is the data that is available. In all the previous days, previous years, he has never exhausted. कम से कम एक लीव का बैलेंस तो बचा रहता था. So now I am at the end of year 1. At the end of year 1, he has 3 days balance left. Very good. Next year, I stand on 31st March year 1 end and say, look, next year he will get 10 days leave. Based on past data of this employee, I have always noticed that he never exhausts his privilege leave. At least 1 day balance to bacha rehta hai. So next year, the maximum leave that he can avail is 10 days plus 2 days. That is a total tenure of 12 days. A total leave of 12 days is what he will be availing in the future. 1 day will lapse. 1 day will lapse at the end of the next year. At the end of the next year. Okay, वो लेगा नहीं, he will not utilize it. Okay. So today, at the end of year 1, realistically, should I assume that he will avail 3 days in the future, or is it reasonable for me to assume that he will avail 2 days in the future?
2 days in the future.
Everybody, are you buying this concept, or do you have any reservations on this concept apart from conservatism? कंजर्वेटिज्म छोड़ के कोई डाउट है इसमें आपको? यस?
No, sir.
नो. विभू, आयुष, गर्ल्स, नेहा, गीता, no reservations. Okay.
No, sir.
Leela, all clear? Yes. All right. So I assume that he will utilize only 2 days in the future. So what will be my expense? 30 lakhs for the full, because he has taken leave within his entitlement. So 30 lakhs pura milega. Plus next year, I assume he will utilize only 20,000. So there only 2 days. So 30 lakhs, 20,000. He will always keep one leave unutilized. Okay, वो हमेशा रहेगा उसका. So therefore, provision for leave encashment will be 20,000. Provision for leave encashment will be 20,000. Are you able to understand this till now? Yes? Are you able to follow?
Yes, sir, very much.
Okay. Next year आ गया, year 2 के. Fortunately or unfortunately, that fellow took all 13 days. First of all, you tell me, is he entitled to take 10 plus 3 days leave in the future?
Yes, very much.
Yes.
Yes. No doubts on that. Don't think our account department bolega, I have estimated you will take 2 days. How are you taking 3 days? That cannot happen. Okay. As per terms of employment, he can take 10 plus 3, 13 days. And still he will get a payment of how much? And still he will get a payment of
30 lakhs.
30 lakhs.
Yes. So then I made a provision for 2 days, but he is availing entire 3 days. So provision for leave encashment, how much should I reverse? 20,000 or should I debit 30,000? Answer is you cannot debit 30. It's not there. So you will debit only 20,000. And your cost for the year will be 29 lakh 80,000. Your cost for the year will be 29 lakh 80,000. Sir, my expense went up by 10,000 rupees. It was 29 lakh 70 in the last example. Here it is 29 lakh 80,000. Your expense has gone up. Yes, obviously it has gone up, because that 1 day which I thought he will not take in year 2, he has actually taken. So I estimated that he will not take, but he took. I estimated he will not take, but he actually took the leave. So therefore, this additional 10,000 cost, which is hitting employee benefit expense in year two, it is getting treated as what? It is getting treated as a change in accounting estimate. Are you able to follow?
Yes, sir. It is not change in accounting policy. Hence, the retrospective effect is not needed.
Yes, absolutely. Retrospective effect is not needed. Everybody agrees to the accounting treatment. Yes. Ayush, Bibhu, Sagar.
Yes, sir.
So this is
Yes.
what we studied in Ind AS 8 as well.
Yes. So now, apart from conservatism, if you have any doubts, please ask. Apart from conservatism, any doubts, Ayush?
So let's say, sir, the provision we are making in year one, let's say the policy is something like that one leave or three leaves will
Hmm.
always be carry forward unless you take it. So there
Correct.
will be no lapse.
Yes.
So in that case, we know that whether in year two, year
Hmm.
three, or year four, he will
Hmm.
utilize that.
Correct.
So in that case, we will always create the provision of 30,000.
Yes.
Okay,
Yes.
sir.
Yes,
Got it, sir.
yes,
Thank you.
absolutely. This is basically so obviously in the question we can't give the full history, but you will have probably when you look at application based questions, full history will come. Like they will put a history saying that uh, this guy who is this Niranjan is there with the organization for the last 15 years. And it has noticed that he always has maintained at least a 3 day year end balance unutilized in respect of his privilege leaves. And that 3 days, you will assume that that much balance he will always keep. In that case, you can assume that and recognize the expenses in the current year, or assume that every year he exhausts. He is a high ranking professional in the company, and to maintain his work life balance, he ensures that he takes all the leaves and exhausts everything without leaving anything for encashment. And therefore, he will be taking the complete leaves. So there you can take that he will utilize everything and assume that 3 days of leave is always provided for in this particular case. It depends on how the question comes. So it is more of an estimation. It is more of an estimation. Again, nothing wrong here. Nothing wrong here. But you see, look at this. One employee, 1 day leave, he has not taken. 10,000 I got lower expense. 10,000 I got lower expense. Okay. Let us suppose there are 1,000 employees in the company. Easily your expense will dip by 1 crore. Easily your expense will dip by 1 crore. Are you able to follow? Yes.
Yes, there is a part of manipulation
there
also.
is a there is a possibility of manipulation that can happen. Okay, you can end up manipulating in this particular case. So when that happens, you have to be careful. Okay, like you need to check the validity of the assumptions that the management is making. Okay, so that is, anyways, that is not our domain, but yeah, people can play around. Okay, so coming back to our, so we did illustration 1, 2, and 3. I will leave illustration 4 for homework. It's theoretical. Same thing what we have discussed. They have just put it in words and given. So you can do this for homework. Okay. You can do illustration 5 also for homework. Okay. Illustration 5 also you can do for homework. Illustration 6 is a very nice question. We will do it together. This is something which is practical, which is what we see in real life. And this is something which you can probably expect in your exams also. Acer Limited has 350 employees, same as a year ago. The average staff attrition rates observed. Staff attrition rate means staff, what you can say, the staff who resigns and gets replaced. That is around 6%. That is around 6% per annum during the past 10 years. Acer provides the following benefits to all its employees. Paid vacation, it gives 10 days per year regardless of date of hiring. Matlab, even if the employee joins on the last day of the year, he will get 10 days credit. Compensation for paid vacation is 100% of employee's salary, and you can carry forward the unused vacation for 1 year. So if I did not avail in current year, I will take it in the future year. I will take it in the future year. And obviously, if nothing is given, we'll assume that FIFO is followed. As of 31st March 20X1, that means at the end of year 1, unused vacation carried forward was 3 days per employee. Unused vacation was 3 days. Average salary 15,000 per day. Accrued expense for unused vacation in X0, X1, the previous year was 65 lakhs. During X1, X2, employees took 9 days of vacation on average. Salary increase in X1, X2 was 10%. How would Acer Limited recognize liabilities and expenses for these benefits as of year 2? Pass the journal entry to show the accounting treatment. Okay. Nice question. Okay. So now you can see. I am having paid vacations. Correct? This is the employee benefits. This will be spread across two sets of employees. One is employees in service for entire year, and the other is new employees. Do you agree? Yes, there are two categories of employees. Old employees, new employees. What is the difference between old and new employees?
Sir, old employee will have a unutilized leave.
Yes, this is the difference. Unused vacation carried forward was 3 days per employee. This is in respect of old employees. New employees, this will obviously be 0. Acha, old and new, how do I calculate the number? 6% they said attrition, right? So 6% attrition bole, that means it's not just attrition. Those who leave have to be replaced. So therefore, 6% attrition means out of the total strength of 350 employees, 6% employees
Is the
are
new employee.
new employees. Absolutely right. Yes. So 6% will be new and 94% will be old. 94% will be old. So now total leaves is equal to opening balance plus entitlement minus availed. Opening balance was 3, entitlement is 10, and they said during X1, X2, employees took 9 days of vacation in average. 3 plus 10 minus 9. So that is equal to 4 days per employee. So therefore, balance of unused vacation is equal to 350 total strength, 94% old into 4 days per employee. Rate they have not given. So 350 into 0.94 into 4. 1316 man days. Are you able to follow? Yes.
Yes.
Ayush, Sagar, Bibu, Geeta, Neha, Leela.
Yes, sir.
Yes,
All.
sir.
Yes.
Yes, sir.
Yes,
Okay.
sir.
Fine. ठीक है. So good. All right. All right. Very nice. Okay. And for these 6 employees, total leave is equal to entitlement minus availed. Opening will not be there. So 10 minus 9, 1 day per employee. So that therefore balance of unused vacation 356% into 1 day. 21 man days. Total 1316 plus this 1337 man days. Is everybody here with me? Yes.
Yes, sir.
Yes,
All
sir.
right. Have they given average salary? Yes. Average salary was 15,000 per day. Very nice. And salary increase in current year was 10%. So this was average salary for 31st March X0 X1. So X1 X2 is 15,000 per day plus 10%. Average salary 15,000 per man day plus 10%. 16,500 per man day. 16,500 per man day. Any doubts so far? Therefore, unused leave vacation balance 1,337 man days multiplied by 16,500 per man day. So this comes to your closing balance 2 crore 20 lakh 60,500. Any doubts so far? Any doubts?
No, sir.
Girls,
No, sir.
all clear. Okay, fine. Neha, clear? Yes. Ayush, Leela, all clear?
Yes, sir.
All right. Leela, Swaminathan, Sanjay, Sagar, all clear? Okay, fine. So journal entries, very simple. Employee benefits, expense account debit, 2 crore 20 lakh 60,500 to provision for leave encashment. Yes. And previous year's liability will be settled. They have said, na? Accrued expense for unused vacation in X0, X1 is 65 lakhs. Provision for settlement 65 lakhs. Is it okay? Yes.
Okay, sir.
All right. Fine. ठीक है. So that takes care of accumulated and non-accumulated absences. So short-term absences, the difficult part in short-term plans is over. Okay. Next, we shall move further. We have something known as, any doubt so far before I move further?
So, sir, we have paid cash in the last question.
65
Uh,
lakhs is going to be settled, right? See, 2 crore 20 lakh is your opening and is your closing entitlement. This is your closing entitlement which is there, right? See, you are having accrued expense for unused vacation was 65 lakhs. You are in a position where we have calculated current year's closing balance of leave entitlement, right? So paid vacation and unused vacation can be carried forward for 1 year. So it is a very logical presumption that if it is an unused presumption, if it is an unused vacation which is there beyond 1 year, that will be settled off. You cannot keep that as outstanding. Okay. So therefore, opening jo tha 65 lakhs, we have settled it out. And the remaining current year closing balance, we have made a provision and kept it in the balance sheet. Is it okay?
Yes, sir. In short, we have used the previous work leaves and new work leaves are in the new year.
Yes, yes, yes. You understood, Ayush?
can we assume that these leaves, that 65 lakh would lapse after 1 year and there would be no
That
cash payout
would
for that?
that would be see, they have not mentioned that they lapse. Okay, so what we could do is I cannot carry both the liabilities for sure. Okay, I cannot carry 2.2 crores also in the balance sheet and 65 lakhs also in the balance sheet because 65 lakhs cannot extend beyond 1 year. Okay, so by 31st March 20x2, 65 lakhs should go away. Treating it as lapsing would require an assumption to be made. Normally, they get settled off in cash. I mean, that is the very normal way in which these kind of carry forward leaves get settled. So, whenever you are having a leave encashment scenario where the leaves get accumulated, then typically those accumulated leaves which are unutilized also get settled in cash. That is the general way the industry works. You cannot mix up the things when after a particular time they lapse. That is generally not prevalent in the industry. So in general sense, it is taken that way. Okay.
Sorry, even I had query on that. Since it is a paid vacation is clearly mentioned on the para number 2 on the 10 days, it is
Yes.
a vested condition. Also,
Yes.
the vacation can be carried forward for 1 year, which means the next year will be settled.
Yes. Yes.
So, see, this assumption we need to make it clear. I believe so.
Correct. So see, typically you can just mention it by way of a note in your answer stating that since it is a paid vacation and we cannot utilize beyond 1 year, so it is assumed that 65 lakhs will be paid off. That is one thing you can assume, which is a realistic assumption in this case. Okay. But to say that it lapses and will be written back is something which is, I'm not saying it is not possible, it is something which is rare. Okay. Is it okay, Ayush?
Yes, sir, completely fine. And if it is written back, then it would move to PNL directly.
You would move it to the P&L directly. Yes. You can credit it to employee benefit expenses only. तो आपके सारे expenses के सामने this will be adjusted on a net basis. Okay.
Yes, sir. Thank you.
All right. Anybody else? Sanjay, Sagar, Bibhu, all clear? Okay, fine. Then we have 2, 3 very small concepts to discuss. Okay. One is profit sharing and bonus plans. So typically you have certain plans which require employees to receive a share of profits. They stay for a particular time, then they will get their share of profits. Or in some cases, you don't have a legal obligation, but you have a constructive obligation that you pay the bonus. So in all these cases, whether they are a constructive obligation or a legal obligation, you have to recognize it. Okay, you have to recognize the plans. You have to recognize the plans, recognize the provision. So fairly simple. Okay, present obligation is there, reliable estimate can be made. You recognize the provision. Very simple, no complications. Okay. So I leave this with homework. It's just two, matlab question is so big, but if you look at the answer is not even one sentence. Okay. So question bahut bada hai, answer is very small. Basically, they are saying you have an entity which has a profit of 200 crores and as per the profit sharing plan, it pays 5%. Estimated that due to staff turnover, payout would be around 4.5%. So the requirement of this plan is the staff has to remain in service, but some people have left, which is why the payout came down from 5% to 4.5%. So what is going to be your liability and expense? So it is going to be 200 into 4.5%. So that comes to 9 crores. That's it. Okay. So that is your illustration 7. You can go through it. Okay. Illustration 8 also you can go through. Similar question. थोड़ा सा ज्यादा बढ़ाया है. What they are saying, Acer has 350 employees. Attrition rate 6%. Annual bonus in past years, bonus was paid in June after the financial year end. Bonus for X1, X2 was 1,25,000 per employee. Acer used to increase the amount of bonus based on inflation rate, which currently is 8.5%. But there was no legal obligation to increase. So tell me one thing, is this a legal obligation or a constructive obligation to pay bonus as per inflation rate increases?
It's a constructive obligation.
Constructive. Ayush, yes?
Yes, sir.
You understand what is constructive, right? Constructive is there is no written agreement. Nobody can sue you. Nobody can take you to the court because it's not written, so to speak. But not written effectively gets negated by a practice that you have been following. So in this particular case, the practice is to link your bonus increments with the inflation rate. So though legally I can say 1,25,000 I should consider, practically you have to factor the bonus increase. So bonus increase is 1,25,000 plus 8.5%. So that comes to 1,35,000, 1,36,000 roughly per employee. Multiply by 350 into 94%. 350 into 94%. Because if you see the word, Acer paid bonus to all employees who were in service during the entire financial year. So 6% are fresh. So you can take only 94%, that is 329 employees. Are you able to follow?
Yes, sir.
Yes.
And with the increased rate of 8.5%.
Yes, 1,35,625. So that gives you the provision for bonus. Okay. So now we have completed short-term employee benefits, which is the biggest, which is relatively easy, relatively small. Now we come to the biggest chunk of this chapter. That is your post-employment benefits. That is your post-employment benefits. Any doubts so far? Anybody? No doubts?
No, sir.
Shall we proceed?
Yes.
Yes, sir.
All right. So now when we talk about post-employment benefits, I'll give a break at around 9, 10, around that time. Okay. Until then, we'll see if we can cover another concept. Okay. See, post-employment benefit. What do you think the moment you hear this? Post-employment benefit. दिमाग में क्या आता है? दिमाग में आता है, sir, this comes after employment ends. This comes after employment ends. Now, employment can be ended by virtue of superannuation. आप उसी कंपनी में you are working till you reach retirement age of 58 years or 60 years, whatever it is. Or if that is not the case, then employee resigns. That is a post-employment. Or will it cover termination? Answer is no, because that is not something which an employee voluntarily does, or that is not something which happens by virtue of becoming by virtue of superannuating. It is something which you are forced to quit. So that is not covered here. Okay, that is not specifically covered here. Termination benefits are separate. So post-employment benefits, when an employee leaves, when you leave, what do you get on termination, on leaving the organization after resignation or superannuation? क्या क्या मिलता है आपको? What do you get? You will get your PF balance. You will get your gratuity amount. If you have superannuated, you will get your superannuation fund, wo jo bhi amount hai. Yes, all these things will come to you. You will get leave encashment balance if anything is there. Absolutely right, Neha. Yes, ये सब तो जो भी है वो मिल जाएगा आपको. Leave encashment already we have covered. Leave encashment is not a post-employment benefit. Okay, you are getting leave encashment as part of your employment also. तो वो जो balance पड़ा है leave का on the date of ending of your employment, that is something which you are going to get, but that is not a post-employment benefit proper, so to speak. Okay, so this is all done. So you will get PF, you will get gratuities, your superannuation fund, और भी अगर कुछ employment closure के related है, then you will get all of those benefits. Now, these benefits are broadly categorized into defined contribution plans and defined benefit plans. Have you heard these terms, defined contribution, defined benefit plans? Have you heard it?
Yes, sir. We have.
Yes. All right. There are some people who have not heard, which is totally fine. So let me give you an example and then you will understand. Okay. See, how many of you are aware of this? How many of you are aware of this? There is something known as a
Yes, aware.
Yes. All right. Now,
Yes, sir, I'm aware of it.
this provident fund, normally how much you contribute? 12% of your salary. That is your basic plus whatever benefits for pension calculation. That is what they call it. Okay. All right. Now, that means your dearness allowance, basic plus DA plus benefits that are normally considered for retirement workings. Okay. 12% of that is paid. Who pays? Who pays? Employer will contribute it to a PF trust bolo, or to it sets up its own PF, or it moves it to a government recognized provident fund. वहां पे वो पैसा रखता है. Okay, so employer will contribute 12%. Employee also will contribute 12%. Together, that corpus goes on increasing till at the end of the what you can say, at the end of the employment, it becomes a sizable corpus. And that sizable corpus, the employee can withdraw once he leaves his employment. Are you able to follow? Yes?
Yes.
Yes, sir.
Acha. Now, tell me, the interest rate on provident fund today is in the range of 8 to 8.25%. Okay? Typically, this is the range. Okay? Now, suppose interest rate falls to 5%. Interest rate falls to 5%. Can the employee come to the employer and say, sir, interest 8 से 5% हो गया, big drop in my interest, please compensate the difference in interest? Will the employer be liable to compensate that?
No.
No. Understood, right? Everyone's Leela, Vibhu, Sanjay, Geeta, Ayush. Will the employer be liable to compensate this interest gap? Answer is no. Suppose you are having a scenario where the provident fund has made investments in certain companies' bonds and that company has gone bankrupt. By virtue of that, see, I'm just making up stories. It's not that they put it in any XYZ bond. Okay, I'm just making up a story so that you can understand the concept. That company goes bankrupt. Your provident fund balance drops severely. Can you go to the employer and say, sir, where the provident fund invested, those companies had a problem. Please compensate me. Uh, employer do anything about it?
No, he cannot.
He cannot. He cannot. Okay. So in all these cases, what I'm trying to highlight is, though there is a contribution by an employer to some fund, provident fund is an example. There are so many cases where we can have what you can say, so many cases where you are having this kind of arrangements where employer cannot do anything. Employer cannot do, employer will not do. In all these cases, the employer's obligation ends the moment he makes the payment to the fund. The moment he says, sir, इसका बेसिक के हिसाब से इतना पेमेंट बनता था, मैंने इतना पेमेंट कर दिया, these are my challans. So please don't tell me I have not complied. I have complied with all the requirements. Yes. After that, whether the interest rate goes up, whether it goes down, whether there are some scripts which are going for bankruptcy, which are from the provident fund, or whether it does not, I have nothing to do with it as an employer. My obligation has been to contribute, and I have contributed on time. Is it okay? This is what we call as a defined contribution plan. This is what we call as a defined contribution plan. Anything, any doubts so far? Any doubts?
No, sir. Clear, sir.
Okay. Now we move to the next case, gratuity. How do you calculate gratuity? Last drawn salary multiplied by 15/26 into number of years served. Okay. This is something how you handle this is your last drawn salary into 15/26 into number of years. So this is how you do the gratuity, right? Am I missing out on something?
Yes, sir. This is as per the payment of project act.
Yes. All right. All right. Now you tell me, if the payment is lower than this, if the payment is lower than this, can the employee take the employer to court?
Yes.
Yes, sir,
Yes,
definitely.
definitely you can take. In the first case, if the interest rate drops from 8 to 5%, can the employee take the employer to the court?
No, sir.
No.
No.
If in the first case, some of the securities, those companies went bankrupt, can the employee take the employer to the court?
No.
No. All right. But in the second case, all of us have unanimously agreed if the payment does not happen according to this formula, then employee can take the employer to the court. So now we come back to our discussion. The first case, which we saw of the provident fund, that is known as a defined contribution plan, where I make payments to some specific fund, and that closes my responsibility. That closes my responsibility. Thereafter, fund value goes up, fund value goes down, returns above market, returns above inflation, returns below market, below Nifty, negative returns. As an employer, I really am not going to get affected by that. The investment risk falls on the employee. Investment risk as well as the actuarial risk falls on the employee. Employee alone is responsible for whatever be the price fluctuations, whatever be the price fluctuations. And considering that investment in market instruments is volatile, what these provident funds do is they typically invest in government securities, government bonds, okay, fixed deposits. This is where the provident funds generally set up their monies, because this is pertaining to employees, and therefore their monies should not have a reduction in value. Okay, so defined contribution plan, again, straightforward accounting, no actuarial assumptions or discounting of contributions. Any doubts on defined contribution plan? Any doubts on defined contribution plan? No, no doubts. Okay. Defined benefit plan. Any plan other than defined contribution plan becomes a defined benefit plan. Obligation is to provide agreed benefits, gratuity according to a plan formula. Defined benefit plan according to some internal scheme of the organization, which employees have agreed to. Okay. So in all these cases, the employer is responsible to make good to the employee whatever has been promised. That is why we call it as a defined benefit plan. We call it as what? A defined benefit plan. Your benefits are decided or determined in the beginning. Your benefits are decided or determined in the beginning. And at the end, when the benefit actually comes to a payout, when the benefit actually comes to a payout stage, the payout will happen according to the original terms which has been agreed between the parties. Is it okay? Yes. So if the employer puts money in some bonds, in some debentures, in some equity shares, in some fixed deposits, and they give certain return, and those returns, let us suppose they are not uh, uh, commensurate enough to meet the liability that I am supposed to discharge. So if that is the case, then who is responsible to make good the shortfall? The employer only is responsible to make good the shortfall. So therefore, actuarial risk as well as investment risk, both of them will fall on the entity. Whereas in defined contribution plan, they belong to the employee. Here they belong to the entity. Okay, and accounting for this is in particular quite complex. Okay, it's not as simple as a defined contribution plan. Are we able to follow? Yes? Any doubts? All right, Leela has confirmed. What about others?
What would be the examples of benefit plan? Defined benefit plans?
Example of
Defined benefit plan.
your gratuity could be one.
Gratuity. Okay.
Yes, you could be having your superannuation scheme within an organization if they give a mechanism to determine that. All right. So these are some things which you will understand. Okay. So we will look into these risks later, Ayush. I am going to come towards defined benefit plans. That time these investment risk, actuarial risk, we will be looking at. Okay. So far, is it clear? Yes.
Yes, sir.
So
And there can be hybrid plans also.
hybrid as in what do you mean?
Like there is a fixed contribution, but
Yes.
the company is promising certain base level of payment.
Definitely, definitely. So when there is that kind of a hybrid plan, then even in those cases, I think it would be appropriate to treat it as a defined
Benefit
benefit
plan,
plan.
right? Because
Because
it is a residuary.
yes, you are promising something which is your obligation, right? You are defining the benefit that goes to the employee. That is why we call it as a defined benefit plan. Okay.
Yes, sir. Got it.
All
Thank you,
right.
sir.
So once that is done, so when you talk about defined benefit plans, as who was it? Sanjay was asking, plan benefit formula. Gratuity is nothing but it works on a formula. Last drawn salary into 15 by 26 multiplied by number of years that you have served. It's a formula. Or you give a guarantee. On retirement, the company will pay 1 crore rupees to anybody who has served for 30 years. Yes, so that is a guarantee. You have to fulfill that now. You are responsible to fulfill that. Or informal practices. Example, you increase the benefits in line with the inflation rate. Though it is not legally mentioned, it becomes an obligation. It becomes an obligation. Okay, next. So that is how you are going to understand. So I leave this with homework as homework. Go through this. These are only theory questions. Okay. And I want you to read all this. ये सब है as theory in your study module. Multi-employer plans. Okay. This also you can go through this. Go through this as homework. See, what I'm marking is only theory. Risk sharing plans, state plans, you know, yeah, insured benefits. That's it. So all these slides, please go through as homework. You will generally not have many questions because these are whatever I have discussed. These are largely theoretical in nature. पढ़ोगे अपने आप, you will understand also. Okay. All right. Defined contribution plan, provident fund entry every month is a straightforward entry. You will pass it as employee benefit expense account debit to cash bank or to PF payable, accrued liability. And if you are paying something in advance, then prepaid expenses. So all these cases are accounting for defined benefit plans. This journal entry pertains to that. Obligation is determined by amounts to be contributed for a period. Actuarial assumptions not required to measure obligation of the expense. No possibility of actuarial gains or losses. Obligations measured on an undiscounted basis. Is it okay? Yes. Is it okay? Any doubts?
No, sir.
No doubts. Okay. You can go through this for homework. Okay. You can go through this for homework. This is a summary of whatever we have done so far. Okay, so that kind of, closes out on defined contribution plan. Okay, we take a break now, 5 minutes break, not more. I'm going to start off with defined benefit plans after the break. Very critical. This is the heart of Ind AS 19. Okay. ये समझ लिया, then the remaining standard is just a walk in the park. Okay. So until then, just we take a 5 minute break and we shall reassemble for defined benefit plans. Any doubt so far? Okay, 10 kick, we take a 10-minute break. Okay, we take a 10-minute break. Anybody has any doubt so far?
No, sir. Clear, sir.
Ayush, all clear?
Yes, sir. Clear.
Acha, Neha, Geeta, Sanjay, no doubts. Okay, so take a 10-minute break. We shall resume at 9:12. Okay, 9:10. Sorry, we shall resume at 9:10. Okay, yes. So coming to defined benefit plans. See, as I said, this is an amount that is payable pursuant to some defined formula like gratuity or some guaranteed amount, whatever is there. I, as an employer, am defining the benefit that will be payable, and the employee is giving his concurrence. Both of us are concurring to he will provide the service and I will pay this benefit. So it is obligatory upon me. Okay. So now let us take the case of uh, let us understand how does this work. I will explain without any numbers. Then I will run you through a number. I will run you through a benefit, a simple benefit that will be calculated. We will see how the accounting happens and we'll correlate what all we are discussing. Okay. See, an employee joins an entity on 1st April 2016. We are reporting, let us assume, for 2019-20. Okay. And the retirement is in 31st March 2050. That means total service period is 34 years. Now see, let us take a very simple case of gratuity. Okay. What will be the gratuity? Salary of March 2050, correct? Multiplied by 15 by 26, multiplied by 34 years. I'm just assuming there won't be any change to the Gratuity Act and the formula will be the same and we need to calculate. Do you understand this working? Yes, everybody agrees with this?
Yes. Yes.
Yes. Now tell me, what aspect is variable in this entire equation, in this formula? What is variable?
Number of years? 34.
Yes. Why do I say it is variable?
Yeah, if sir, he may continue till 34 years.
Correct.
Any time in between, it will happen. Maybe death or accident
Correct.
or
So
he will
first of
resign.
all, absolutely right. So first of all, number of years is variable. Second, salary of March 2050. Is it variable?
Yes, sir. Obviously, it is variable because in the future we cannot predict now.
Correct. We cannot predict. So Ayush, are you with us on this? Yes, Neha, Geeta, Vibhu.
Yes, sir.
Yes. तो इसमें फिक्स्ड क्या है? Only this.
15/26.
Yes. वो भी क्या? Assuming that the law does not change. Tomorrow, if the law changes, makes it 1/2 or 2/3 or whatever, then that also will change. But anyways, we stick to 15/26. Okay. So now when this is our situation, there is a lot of uncertainty. So can I postpone booking the expense to 31st March 2050?
No, answer is no.
No, you cannot. Every year I need to book the expenses, build up the liability gradually. That is where this standard steps in. That is where it's not easy. It is not easy because there are various uncertainties involved. Risk जिसको बोलते हैं ना, the various uncertainties or risk. Will employee continue for 34 years with the company? Labor attrition. I don't know. Will the employee live for 34 years? Mortality. Will the employee be physically fit to work for 34 years? Disability. Payment happens after 34 years. From 1920 to 50, after 30 years. So after 30 years means a liability I have to estimate 30 years ahead and bring it to present value, because the payment is happening after a very long horizon. So I have to recognize it in the PV terms. So what will be my discount rate? Benefit levels borne by the company with a future salary increase. How much salary increase will I estimate? Tax is payable on income earned by plan assets. What do you mean by plan assets? See, on this date, the amount that will be paid is a huge amount. It won't be a small amount. It is quite possible that your cash balances will typically get consumed in your day-to-day activities. So you will not be having the cash balance necessary for that day's payment. So what do? Every year, thoda thoda karke, you will set aside into fixed deposits, high quality corporate bonds. Like that, you will go on setting aside the money. So these taxes payable on the income earned by those plan assets will give an income. Income tax on that you have to estimate, and various other estimates will be there. So there are plethora of assumptions, plethora of risks, plethora of uncertainties which are involved. All of this need to be captured in determining the liability that I am required to account. Are we able to understand this?
Yes,
Yes.
sir.
Yes.
Yes.
Ayush, Vibhu,
Yes,
Yes,
sir.
sir.
all right. So in a nutshell, the purpose of this is not an easy task. This is not an easy task. Okay. So go through this one for homework. Basically, it is trying to say for an IT company, the company does not want to follow accounting of gratuity on accrual basis. They want to do it on payment basis because of high attrition that is there in the IT industry. They will make a disclosure. So is it legally takeable under accounting standards? Answer is no. Because you cannot depart from an AS on the ground that it is difficult to implement. You have to implement. So the standard says take the use of an actuary if you want. They recommends you to use an actuary. Okay. So now we come to accounting for defined benefit plan. Okay. These steps are there. If I go theoretically slide by slide and explain it to you, first I will only sleep in the class and then you will also sleep in the class. Okay, so what I will do is I will explain with the help of an example. Okay, we will take an example, we will understand how the things are going to work, and then you can correlate it to what we are doing. Okay, so just take this very simple question, not difficult, not a very huge question. Okay, I will, to save on time, it's all written here. So I'm just doing this question 9. Okay, Acer Limited hired a professional in April 2017 for 6 years of service terminating in March 2023. Okay, it's a contract employment. They have hired a professional for 6 years. All right. Apart from regular salary and annual bonus, Acer will pay a lump sum remuneration of 45 lakhs upon termination of employment. See, words used are layman, but here don't take termination as a layoff. The contract itself is for a 6-year period. Okay. Discount rate used for actuarial valuations is 10% per year. Show how the obligation builds up over the employee's service. Ignore actuarial assumptions other than the discount rate. See, first of all, is this amount that is payable after 6 years, is it defined? Yes or no?
Yes, sir. It's a defined benefit plan.
Yes, it is defined. Everybody, do you agree that this amount is defined?
Yes,
Yes.
sir.
Yes. That means tomorrow, if Acer Limited does not pay 45 lakhs, can the professional sue the company? Answer is yes. So 45 lakh is payable. to this professional. It is a defined benefit plan because there is a guaranteed amount that will be paid to the professional. Okay, this is one thing. Now, we shall have to see how to account. You tell me one thing. This 45 lakhs, is it accruing on the first day of the year? Is it accruing on the last day of the employment contract, or should it have a gradual accrual over 6 years?
Sir, it's accrued over a period of 6 years.
Absolutely. 6 साल में आपको उसका accrual दिखाना है. You have to show the accrual over 6 years. You cannot say that it is accruing in the 6th year only. So now understand. Total 45 lakhs over 6 years means each year how much it comes to? 7,50,000. Correct? Yes or no?
Yes, sir.
That means if I start with 0 and every year I go on accruing 7,50,000, at the end I would have accrued 45 lakhs. Correct? Yes, this part is clear. Now, is this 45 lakhs payable within 12 months or payable beyond 12 months?
Beyond 12 months.
Beyond 12 months. Sir, if it is payable beyond 12 months, I need to bring it to present value because 45 lakh is a liability that will be discharged at the end of the 6th year. So therefore, I will need to bring it to the present value. Yes or no?
Yes, sir.
So I will be taking, see, first we understand the process. Then ये rate कैसे आता है, rate क्यों आता है, we will understand that shortly. Okay. So they have given the discount rate to be 10% per annum. To be 10% per annum. Is it okay?
Okay, sir.
All right. So now year 1. Understand now. Do I have any opening obligation on year 1? Answer is no. So this is 0. Okay. There is no obligation. So interest on opening obligation also will be 0. Okay. Now, what is the first year's attributable expense? 7,50,000. Yes or no? Correct?
Yes.
But when is this 7,50,000 going to be paid? At the end of which year?
6th year.
6th year.
6th year. That means between 1 to 6, what is the gap? How many years?
It's total 6 year.
Total 6 or total 5? At
5
the
years.
end of year 1 to end of year 6.
It's a 5 years.
5
Sir,
years.
if we take start of the day, it's 6, and if we take closing date, then it's 5.
Correct. तो start of the date हम लेंगे नहीं because it is an expense to be booked for the entire year, right?
Okay, sir.
So you will go to end of year 1. Settlement will happen end of year 6. So settlement will happen after 5 years from end of year 1. Correct?
Correct, sir.
Yes. So the discounting factor that we will apply is 10% for 5th year. Are we able to understand this?
Yes.
Ayush, Geeta, Neha, Bibu, are we all able to understand this?
Yes, sir.
Yes, sir.
Yes, sir.
See, settlement happens after 5 years. So I bring that to the present value of today by taking the 5th year's discounting factor. So the discounted value today is 4,65,691. Is it okay?
Yes, sir.
Yes. Now see, why do I do discounting? See, I am making a payment of 45 lakhs after a period of 6 years from the date of commencement of the employment. If I take 7,50,000 each year as a prorated cost, don't you think that the cost today of 7,50,000 is significantly higher than the cost of 7,50,000 which is getting booked in the 6th year? Don't you think it that way? 7,50,000 today and 7,50,000 after 5 years. Is it the same or is it different?
It is
It
different.
would be different. The value would be higher now.
Yes,
Only.
the worth of 7,50,000 today is much more than 7,50,000 after a period of 5 years or 6 years. I think everybody agrees to that. Number one. Number two, the fact that 7,50,000 today is more than 7,50,000 after 5 years needs to be captured in the accounting that we are going to follow. Otherwise, every year doing a 7,50,000 accounting is not fair in terms of attribution of the expense for that particular year. Is it okay? Yes? Are you able to follow?
Yes, sir.
Yes,
See,
sir.
today if I book 7,50,000, tomorrow if I book 7,50,000, then I book 7,50,000. Do you think an employee will work on the same salary for 6 years as a common sense principle?
No, sir.
No, sir.
No. So the cost which I need to bring in today also should show a gradual increase, because the employee in the normal flow would have different salary costs in each year. Do you agree? Yes. That discount rate is what they have taken to be 10%. Number one. Number two, end of year one, employee has worked. He is entitled to one proportion of that 45 lakh, which is 7,50,000 in future value terms. If that is going to be paid after 5 years, don't you think that there is a significant financing arrangement in this kind of contract?
Yes, sir.
Though there
Surely,
is
sir.
no principal flow that is there is no principal element. The employee has not given a loan, but employee has given services and agreed to get compensated for that after 6 years. Do you follow?
Yes.
Yes. See, उसको basic salary मिलेगा. He will get basic salary. But he is also agreed to get something after 6 years. So can I say that employee is rendering services today and accepting payment after 6 years? You guys have studied Ind AS 115. In that, we have trade receivables with a significant financing component, at least as a concept. Yes or no?
Yes.
So
Yes.
here also, employee has done the work, but he is accepting payment after 6 years, is somewhat similar to a significant financing component in the arrangement, which needs to get reflected. Yes or no? Bolo, all everyone, Geeta, Neha, Bibu, Sanjay, Ayush.
Yes. Yes.
Yes. All right. So
Yes, sir.
that is the reason we need to do a discounting. That is the reason we need to do the discounting. अच्छा ये कौन सा rate लेंगे? We will come to that. We will come to that. Okay. But in this year, now see, each years हमने attribute कितना किया था? 7,50,000. This each year's cost is basically the work that the employee is doing. Each year's cost is termed as one unit. Okay. एक साल का है that cost bundle is termed as 1 unit. Okay. So in a 6 year, in a 1, 2, 3, 4, 5, 6, in a 6 year period, how many units are getting accrued? 6 units are getting accrued. Are you able to understand? 6 साल में हर साल एक एक यूनिट, so that comes to 6 units. So I am building, I am projecting these units over a 6 year period. Are you able to follow? Yes? Any
Yes, sir.
doubts?
Yes, sir.
Yes?
Sir, I am thinking why not it's a 6 year? We are putting the 5 years, which means that on the day one he joined, on the end of the
Yes.
year only we will came to know that okay, he continued there in the office on the 1 year. That
Obviously,
is
because
that,
in
that
the
is
first, on the first day, there is no rendering of service which has happened, right?
okay, sir. That is a reason we are giving 5 years effect. Otherwise, it would
Yes.
be a 6 year effect.
It is a 6. See, if you, so this is an yearly computation I'm talking. Suppose you go for a monthly computation, then it will be 12 months in the first year, 12 into 6, 72 months. So you will start accruing from the end of the first month itself if you are closing the books every year, every month. So first month will be 71 time periods. 71 months ka discounting you will have to handle. And then the second month you will have to handle 70 months. Like that it will go on happening. Do you follow?
Yes, sir. Sir, in case of the listed company as well, the limited
Yes.
company, the listed
Yes.
company, therein that the quarterly report also will be published, right? Indian
Correct.
report.
So take it
Indian
on a quarterly basis.
the quarterly basis they will. In this case, on the quarter four, they will provide this information.
Quarter 4 they will have this information, but they must accrue it in quarter 1, 2 and 3, right?
Yes, yes. On divided by four, they will do the accrual.
Yes. 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 Okay.
Right, sir. Right, sir. Okay,
All
got it.
right. So to come back to our discussion, this 1 lakh, 7 lakh 50 each year is termed as 1 unit. This 1 unit I am projecting over the life of the contract, of the employment contract. I am projecting each unit and I'm giving it the credit. I'm building the credit to the gratuity liability. Yes, which is why this method is known as projected unit credit method. Okay, projected unit credit method. So 7 lakh 50 is 1 unit. When I convert it into the present value, when I convert it into the present value, this present value is known as current service cost. क्या बोलते हैं इसको? Current service cost. That means what? In simple terms, this lady has worked for 2017-18 for 1 year. At the end of 1 year, she has provided services equivalent to 4,65,691 rupees. That is your current service cost in relation to this defined benefit plan for the first year. Are we able to follow the terms now? Yes? Ayush, Bibhu, Sanjay, Leela,
Yes, sir.
Yes,
Neha,
sir.
Geeta, all
Yes, sir.
clear? Yes.
Yes, sir.
All right. Now we move to the second one. Now this 4,65,000 end of year one will become opening obligation for year two. 10% interest, finance cost, because it is like a significant financing arrangement. Settlement will happen after 5 years. So you will have significant financing component. And then year two, the lady has served. So at the end of year two, another 7,50,000 unit you will have to account for. But 1 minute, do I call? Yeah, I'm sorry. Yeah. Okay. So coming to the second year, another unit of service is provided. That unit of service, when will it be settled? It will be settled at the end of the sixth year. So between second to sixth year, how many years are there? 4 years. Do you agree? Yes
Yes,
or
sir.
no?
Yes, sir.
If you agreed for 5 years, boss, you have to agree for 4 years. Otherwise, if you have a problem with four, you must have a problem with five also. Okay, so here it
Yes, sir.
will be fourth year. Okay, so the current service cost will be 7 lakh 50 into 0.683. Okay, so that comes to 5 lakh 12,260. This is the service cost for the second year. Current service cost. You see, this also is changing. This also is changing, and it must change because employee will not work on same salary scales. So similarly, when I'm booking the cost, that also must exhibit that uh, change. So 5,12,260 is the current cost. Similarly, opening obligation, 10% interest, discount factor, current service cost. This goes on moving like this. Is it okay? Yes. यहाँ तक सब ठीक है?
Yes, sir. In capital budgeting also we do from the year 1, 2, 3, 4, 5. Now we are doing
Correct.
the reverse way. Reverse way we are
Yes.
doing it.
Yes, this will be a reverse discounting. This will be a reverse discounting because settlement happens at the end of that period. Okay.
Which means year 6 is the first year and
Yes.
year 5 is the second year, like that.
Yes. Year six is the end of year six is the 0th year.
Yeah, zeroth year. End of the
Yes.
year 6 is
Then
zero.
this
Zero,
is
which
the
means
first
1.
year. So on
Discount
and
effect
so
will be
on.
1.
Yes. Okay. So then the obligation gradually builds up to 45 lakhs. The obligation gradually builds up to 45 lakhs. And what entries am I going to pass? Employee benefit expense account debit to provision for employee benefit. The finance cost, which is basically this interest component, this also will be a part of employee benefit expenses. I cannot take it as a finance cost and treat it as interest in my financial statements. Why? Because there is no lending arrangement. There is no lending arrangement. Employee has not given cash to me. This is just a deferred payout for which I had to give effect to the financing component. That is why I have calculated the interest. Otherwise, in contractual terms, it is not a financing arrangement in the first place. I am accounting for substance over form, and therefore I am treating it as a finance cost in my workings. But when I'm actually going to post entries in the books, both the current service cost and the interest cost will be debited to employee benefits expenses. Are we okay with this?
Yes, sir.
Yes. Ayush, Vibhu, Geeta, Neha, Sanjay, Leela,
Clear, sir.
clear? All right. All
Sir,
clear.
we are taking the provision over here in this case on the every year. Instead of
Yes.
taking the provision immediately, if we invest anywhere, we will get income, right?
I'll come to that. I'll come to that. I'm not denying. I'll come to that. Okay. First, we'll do step by step. Okay. So this is how the obligation is getting built. Okay. So that takes care of this question. Show how the obligation builds up. So you can see the unit of benefit every year is 7,50,000. You can see, yes, the current service cost we have already calculated. The interest cost gets factored in here. and the closing obligation at the end of each year gets factored here. Are we okay with this? Yes?
Yes, okay.
Ayush?
Yes, sir.
Okay, fine. So this is your build-up of the obligation. Okay. So what we have done is we have now, if I have to explain as a layman to you, how did I calculate the obligation on an annual basis? What did I do? I started off with what is the final amount payable? What is the final amount payable?
45
45
lakhs.
lakhs. इसको हम लोग अभी you and I are not laymen. We are chartered accountants.
Financially literate.
You are financially literate guys. नहीं financially literate नहीं, you are much beyond financially literate. Okay. So इसको हम लोग बोलते हैं ultimate cost of benefit. Ultimate cost of benefit. Ultimate cost of benefit to the organization is 45 lakhs. This ultimate cost of benefit, now we will read the theory. Okay. Ultimate cost of benefit is the first thing that we have calculated, and then discount it to determine the present value of defined benefit obligation. This also we have done. The first two steps we have done. Are you in line with the understanding now? Yes?
Yes, sir, very much.
Yes,
Very
sir.
much. All right. Now, some theory on ultimate cost of benefit. One is, see, this was a simple case where the ultimate cost of benefit is 45 lakhs. But think of a scenario like gratuity, where it is calculated based on estimated salary. At that time, final salaries, I don't know. Employee turnover and mortality is a variable. Medical cost trends is a variable. Other variables, so many are there. Investment earning on plan assets in case of funded plans. I'll come to funded plans maybe tomorrow, but I will explain what it is. High degree of uncertainty, long period of time. All these aspects we have covered. The objective is accounting for the benefits as they accrue, plus including impact of uncertainties in the amounts accounted. Okay, so apply an actuarial valuation method, which was projected unit credit method. Attribute benefits to the period of service. We did it in our example. We divided it over 6 years. And we have made actuarial assumptions. This is not our job. This is not our job. Okay, this is typically outsourced to an actuary. What is actuarial assumption? We will see. Okay. Actuarial valuation method is the projected unit credit method. We just saw what it is. It is also known as accrued benefit method prorated on service. Accrued benefit 45 lakhs, prorated on service 6 years. So 7,50,000 per year, or benefit divided by years of service. Okay. To determine PV of defined benefit obligations, related current service cost, past service cost, we will see what it is. Okay, each period of service gives rise to additional unit of benefit entitlement. End of 1 year, you get entitled to 1 unit of benefit, that is 7,50,000 at it undiscounted level. Next, another 7,50,000 undiscounted value, then another 7,50,000. So each year gives rise to 1 more unit of benefit entitlement, and measure each unit separately to build up the final obligation. So overall, you go on building the units, go on capturing the finance cost, you will ultimately fall in line with what is the liability that you have committed will be paid to the employee at the end of the employment term. that is either on resignation or superannuation. Are we okay with this? Yes.
Yes, sir. This slide look like Parliament building.
Yeah. Yeah. And finally, we do the allocation on a straight line basis. We did it like that, no? 45 lakh divided by 6, 7,50,000 per year. So that is the first thing. Computing ultimate cost of benefit. This is as per the benefit plan formula. If it's gratuity, apply the gratuity formula to determine PV of defined benefit obligation, current service cost and past service cost. Straight line basis over the period of service. All of this we have done. Okay. So I want you to go through these questions also for homework. Okay. Solutions I have already appended in the assignment section. You can go through them. Okay. Go through this also for homework. This also for homework. Go through this also for homework. Okay. We have done this. Now, when we are computing the ultimate cost of benefit to the entity, we have to make actuarial assumptions. Actuarial assumptions are of two types: demographic assumptions, financial assumptions. Demographic assumption matlab it is related to individual characteristics, your mortality rates, employee turnover, disability, early retirement, how many members with dependents are eligible for benefits, claim rates under medical plans, so on and so forth. This is something that you will take into consideration. Financial assumptions. What will be your discount rates in nominal terms, future salary and benefit levels, future medical cost, including claim handling costs, taxes payable by the plan. All of this you will estimate. Now, these assumptions will be done by, are known as actuarial assumptions. Do you think these actuarial assumptions can change in the future? Obviously, yes.
Yes, sir. Year over
Even,
year it will change.
yes, year on year it will change. But even then, it typically goes forward into, you will have significant changes in the assumptions. So, are these, look at this. Look at this. Are any of these items within my control as an organization?
No, sir.
No, sir.
Ayush, Sanjay, Geeta, Neha, are any of these factors in my control? Bibu?
No, sir.
No, sir.
No. So what the standard tells, since this is not in your control, the impact of change in actuarial assumptions, you will take it to other comprehensive income and it will not be reclassified to the P&L. You'll straight away move it to the reserves from there. Is it okay? Because they want to protect the P&L from volatility which is beyond your control. So therefore, they take it to other comprehensive income. Are we okay with this? Yes?
Yes, sir.
Perfect. Ayush?
Yes, sir.
All right. Now you can go through what are my actuarial assumptions. Homework. Padna hai. Whatever I have discussed, same thing is written. Okay. Again, homework. Whatever I have discussed. Okay. Now, read this for homework. Okay. Very simple. It's not difficult. Okay. So that covers your current service cost, etc., all these things. Now, there is a concept of past service cost. See, you must be aware in government controlled entities, public sector undertakings, etc., normally after 3 to 5 years, there is a wage revision. There is a wage revision. Yes or no?
Yes, sir. Like the seventh pay commission, eight
Yes,
current.
seventh, sixth pay commission, seventh pay commission, there is a wage revision. This wage revision happens a little retrospectively. It does not happen current year. It goes little back and modifies the wages. So if your close family members or any of your friends or their families have worked in government undertakings, whenever there is a wage revision, there is a sizable amount of money that the employee gets, whatever, depending on the pay scale. वो थोड़ा ज्यादा ही रहता है. It is a little more only. So it is your income in that year. And if you remember, for tax purposes, you do some section 88 or 89 relief or some such thing
89.
you do. Yes.
89. Section
All
89.
right. So that is the employee side of it. But you think from employer side of it. This is a cost that had to be incurred in the previous periods, but the wage revision happened now pertaining to earlier periods. The wage revision happened now pertaining to earlier periods. So now you tell me, is this, can I go back in time and modify my financials, or should I take the hit in the current financials entirely?
Current year, sir. Not
Yes.
retrospectively, only prospectively.
Yes. Even if it pertains to prior periods, take the hit in the current period. And will this affect your future gratuity or leave encashment workings? Answer is yes. Because wage revisions will impact your basic and DA and whatever it is. So therefore, your gratuity also will get impacted. So these changes are happening because of a modification to the plan. These changes are happening because of a modification to the plan, and that gives rise to a past service cost. Are you able to follow? See, your gratuity is calculated as last drawn salary into 15 by 26 into number of years served. Now, last drawn salary itself is going to change because current salary is increasing by the wage revision. So when this is changing, automatically there will come a big cost hit to the P&L because of this. That is known as past service cost. That is known as past service cost. Are we okay with this?
Yes, sir.
Yes. Any doubts? No doubts? Everybody clear?
Yes, sir. There would be a huge impact on that
There
year.
would be a huge impact. We have a question. Don't worry, we have a question. Okay, so I understand that the theories may seem a little too much to absorb, but question hai. We will see the question. Okay, so what the Ind AS 19 standard tells us is, even though it is a past service cost, you recognize it in the financials at earlier of plan amendment or whenever you have certain restructuring cost or termination benefits recognition. Okay. So past service cost will typically result in amendment of the plan because your plan's assumptions itself will start getting affected. Then you could have certain amendment in the terms of the plan itself, which is different from what you had earlier. And there may also be a plan curtailment that could happen. Very remote, but a plan curtailment also could happen, whereby there could be a reduction in the number of employees covered under the plan. There could be a reduction. Okay. So when these are the cases, whatever be the hit, it could be a hit, it could be a credit. Those impacts you will take in the current financial year when the plan is modified or curtailed for reasons such as change in your, for reasons such as past service cost or whatever it is. You will take the impact in the current financial year itself in totality. Any doubts?
Sir, what is curtailment, sir?
Curtailment means, suppose you are having a plan that is, now it won't be a statutory plan. Okay, it would be something like an agreed plan between employer and employee. Now, when you have that particular plan was covering, let us say, 500 employees. Then later on, you felt out of 500, we should actually make it applicable to 300 employees. So in this case, you have curtailed the benefits for 200 employees. You have curtailed the benefits for 200 employees. Are we okay? Yes,
Okay, curtailment what is cutting, is reducing.
it's reducing. But
Okay.
typically, when you do a curtailment, again, in ESOPs, you saw cancellation of stock option. Along with cancellation, what did we do? We gave a compensation to them. Yes? Yes or no?
Yes, sir.
Here also, whenever there is a curtailment is immediately followed by a settlement. You take away the 200 people from the plan, but give them something else. Otherwise, they will not be sitting quiet. So you take them out, and to keep them quiet, you pay them something. So it will be curtailment followed by a settlement. In most of the cases, this is what will happen. Most of the cases. Okay. Are we okay with this? Yes. Yes or no?
Yes.
Okay. See, I haven't done any problem solving on this matter till now. It is going to come. Okay. It is going to come. Okay. So now what I want you to do, okay, what I want you to do is, I would want you to try to solve this question, question 10. I want you to try to solve this question, okay? And yeah, so that one question you try, I will be doing it in the next class, but for now, see if you can try this question, okay? So that, with that, I
Okay.
think I will end today's class. So we have come to a particular stage where now onwards we can discuss more questions only in detail on Saturday, because we have come to a manner of understanding how the things work, and with your problem solving, more and more concepts will start getting cleared. But for now, till slide number 47, we have covered effectively a lot of data. Okay, a lot of detail. Any doubts, no doubts, let me know.
No, sir. Clear, sir.
All clear? Okay, Ayush, Leela, Vibhu,
Yes, sir. Clear, sir. We have to revise it.
you have to revise it, madam. Can't help, unfortunately. Okay, yeah, all
Sir.
right then. So,
Sir, one
do
thing I can
revise.
appreciate here is that I was unclear about the vesting and non-vesting period with respect to the benefit.
Okay,
Now it was very clear, sir, actually, that accumulated paid options, non-accumulated paid options. In the accumulated paid options, the
yeah,
vesting period, vesting, non-vesting, I was unclear earlier, actually.
okay, okay, that's nice. That's nice. So,
It's re-
my suggestion, please go through what I'm not leaving you with lot of solving type of homework. I'm leaving you with much of reading material to do. Please do read and come. It will help you. Though, even if you don't read, I will be able to make you understand the next set of concepts. But reading and coming, whatever we have covered, specifically those theory points which I have told you to read, they will clarify a lot of things for you. Okay, so we shall then continue with the next points on what you can say will on Saturday. Okay, until then, I think you can stay safe, and we'll take this forward on Saturday. On Saturday, we also have to cover that one small bit of ESOPs which is left, which is stock options with cash alternatives. Okay. Just towards the end of the next class, we will cover that. I just need around 10 to 15 minutes for that. Okay. And this. You'll first take this. This should not take much time. Then now it's only more of calculations which is left out. Okay. All right. Thanks everyone. See you. Take care.
Thank you, sir. Have a
Yeah,
great day.
thank you, sir. Thank
Thank
you.
you. Thank you. Bye bye.
Thank you, sir.
Thank you, sir.
Thank you. Thanks. All done. Thanks. Thank you. Have a nice day. Thanks.